Are you interested in investing into gold but don't find the profits attractive enough? Perhaps you've been spoiled with the gains in cryptocurrencies back in, say, 2021. Well, in this video, let's have a look at a gold miner with a relatively high leverage versus gold price, meaning that if the gold price rises by, say, 20%, the share price of this miner is going to produce amazing gains. But of course, with leverage comes risk. I'm talking about IAMGOLD IAG, and we're going to have a look at its fundamental valuation. The factors that are included in this valuation model are the gold price, reserves that the company has, the cost of production, long-term debts, taxes, shares outstanding. We're going to look at discounted value, as well as the percentage of shares in insider hands. As you see, it's not an exhaustive list of all the things that might affect the share price. And this sort of fundamental valuation tends to work out in the longer term, whereas day to day and week to week, the share price might actually fluctuate quite significantly due to market sentiments. And what we do in this model is we look at the discounted per share value after production costs, all-in sustaining costs, long-term debts, and taxes. We'll look at three scenarios. Conservative plugs in the gold price of $1,600, balanced plugs in the gold price of $1,900, and optimistic plugs in the gold price of $2,200. As you see, even our optimistic scenario is not outlandishly optimistic. As I've mentioned in some of my older videos, I do expect gold much closer to $3,000, perhaps over the next couple of years, due to record high inflation numbers. Jumping into the fundamental data, IAMGOLD has the proven and probable reserves of gold of 13.94 million ounces, so nearly 14 million ounces of proven and probable reserves of gold, and on top of that, measured and indicated resources of nearly 10 million ounces. Beyond that, the company would have inferred resources, but we don't even include them into our models, making all three scenarios of this model that much more conservative. The reason why IAMGOLD is a leverage play versus the gold price is that its all-in sustaining costs are quite high at $1,670, meaning that if the gold price drops down to $1,800, which is a relatively modest percentage drop for gold price, the company margins are squeezed quite a lot. In this case, the company margins would actually drop by around 50%. On the other hand, if gold price rises to, say, only just above $2,000, which is again a relatively modest 15% increase in gold price, company margins over here would easily double. Long-term debts of the company are at just over $500 million, and the tax is assumed to be 20% for simplicity for all of the miners that I look at. Looking at shares and discounting, the company has 479 million shares outstanding, out of which only 0.31%, less than 1/3 of 1%, is in insider hands. It would be nice to have this number slightly higher, at least above 1%. Insider holdings are positive for valuation, as it's good for aligning the incentives of managers and shareholders, and because insiders are better aware of what's actually happening to the company. With discounting, we use a discount rate of 5%. If you think it's a bit too low for a high leverage miner, let me know what discount rate would you suggest down in the comments below. The discounting, the time value of money, is going to apply to the average mine life, which is 23 years if you only look at proven and probable reserves, and if you add half of measured and indicated resources, the average mine life increases to around 31 years. So with the above fundamental data, let's have a look at our conservative and balanced valuation first, where we only look at the value of proven and probable reserves in the ground, without adding any of the value of measured and indicated resources, never mind inferred resources. So these valuations, even the balanced one, lean that much towards the conservative side. Unfortunately, the risks are pretty high, as I mentioned, with a leverage play. Because if gold price drops to our conservative scenario of $1,600, that's actually below the all-in sustaining costs for IAG. That would be quite devastating for the company, at least in the medium term. On the other hand, if gold price is fluctuating somewhere around $1,900, that's slightly above where the gold price is right now, the balanced valuation is around $2.65. That's also slightly higher than the market price right now, which is around $2.1. So historically, our valuations are in line with the actual market prices. Before we look at the optimistic valuation, let's have a look at some of the highlights which don't enter into this numerical model, but these highlights are still important for your intuitive adjustment of the valuation. The cash balance is very comfortable at nearly $545 million. That's actually above their long-term debt. That is a pretty good sign. Additionally, IAG has quite a good exploration potential with several exploration and development projects in Brazil, Canada, and Mali. And that's all beyond or in addition to all of the ongoing mining operations. And among potential drivers for the share prices in the future is an upcoming production start at Côte Gold mine in Canada, which is expected to start producing in Q3 of next year, 2023. So once this event, this production start approaches, that might actually be a positive factor for the share prices. Finally, looking at our optimistic valuation, where we look at the value of proven and probable reserves as well as only half of measured and indicated resources. And even in our optimistic valuation, we still don't include any of the inferred resources. So even in our optimistic scenario, we're not outlandishly optimistic, and we plug in the gold price of only $2,200 here. Even then, due to relatively high leverage versus gold price, the optimistic valuation is above $7.90. So if you do think that gold price might actually retest recent highs and perhaps make new highs over the next several months, and I personally do think there is a good chance for that, in that case, IAG might actually produce some relatively attractive gains. But of course, we always need to remember about the risks. If you like this sort of valuation videos, make sure to hit that like button and of course subscribe to the channel. And for more details on gold, gold miners, as well as a lot of other assets, including cryptos, general stock markets, and a range of commodities, join us at myfinancesteacher.org. Have a nice day. Bye-bye.